All right, welcome back everyone to part 6 of the 8-part series of the technical tools that you should not be using. And in today's video, we're going to cover why you should not use patterns in your Forex trading or your analysis. Now, I'm going to cover this pretty quickly, but if many of you know, you can go on Google and just type in Forex patterns, and there's going to be an insane amount of stuff and knowledge and just formations that come up on Google. And, you know, a lot of traders, a lot of Forex gurus, a lot of teachers and mentors and profitable traders will say that they use these and that they work. And I mean, sure, maybe they may work every now and then, but you just have to ask yourself, this is always the one question that you have to ask yourself in Forex trading. Do you really think that Forex trading is as simple as just going on Google, typing in Forex patterns, and then seeing these patterns perfectly every single time? Something like this, a symmetrical wedge, an ascending wedge, descending, whatever it may be, these trend lines, harmonic patterns. Do you really think that it's that simple to where any trader in the world can hop onto Google, memorize these patterns, and then become a successful trader? If it were, then everyone would be getting rich. So there's a reason that these patterns don't work more often than not. And that's because, sure, they may work every now and then, and it'll get people's hopes up and it'll make them believe that it's working. And it's so easy to find this on Google. You don't have to pay for this education. So most retail traders go this way. Now, you just have to ask yourself, if it's easy and free, is it really worth it? Because remember, you get what you pay for. So if you study on Google University and memorize these patterns, do you really think that's what it takes to become a profitable trader? Well, probably not. So I'm not going to go into all of the different types of patterns and all that stuff. I mean, I think a lot of people are pretty familiar with Elliott wave and head and shoulders and triangles and ascending wedges and harmonic patterns and all that. All I want you guys to really think of, if you're using this strategy or these strategies or patterns, is ask yourself, do you really think that this type of stuff is just happening in the market out of nowhere? Or could it be possible that this type of stuff is being created by bigger players, maybe banks, market movers, hedge funds, because they understand all retail traders do, because they want free money, fast money. So they go on Google, I'm going to look at a head and shoulders and I'm going to memorize this. And next time I see it, I'm going to take that trade. And we got a head and shoulders right here. And then we buy or we sell or we do whatever and we make money. And that's that easy. You know, same as harmonic patterns, it's the same thing. You know, you have these types of patterns to where it's supposed to go 5 waves or 7 waves, and the retracements are supposed to be a certain amount. And it's just all these patterns and all of these things are created by the bigger players because they understand most of the retail traders are using these patterns. They're using these formations in order to try and find trades. Now, they might work every now and then, but you have to realize, if you want to make money consistently in these markets, all it really is for you to change your mindset, to change your paradigm of thinking, and really understand who's moving these markets, who's in control of these markets. So when you answer that question to yourself, you'll start to really understand why these formations pop up all the time, whether it's support and resistance, harmonic patterns, all that stuff. And another big reason I'm not a huge fan of this type of stuff is because these patterns are so subjective. And what I mean by that is, you may see an Elliott wave here, but then someone else may see one right here or somewhere else. Or this head and shoulders may look pretty easy to spot for me, but for someone else, they're not seeing it. And so really, you're just taking trades based off of what you think. And so now it's become a guessing game. And the last thing you want to do in the Forex market is turn it into a guessing game, because when it turns into that, you don't make money. You want to know what you're doing and why you're doing it. You don't want to just hit buy or sell because you think you see a certain pattern that you've studied off of Google. So if you guys are using that, I would suggest to hop off of it. Now, if you've been making money on it, great. But I also recommend you start to educate yourself on how these markets actually work. So if you guys found this video helpful, or if you have the same thoughts as me, I'd love to see it in the comments below. If you haven't yet, make sure to subscribe so you can see those last 2 videos of the technical tools that you should never use. And I'll see you guys on part 7.